Thank you, Kamal. Thank you, Taxmann, for giving this opportunity. Let me share the screen. Good evening, participants. Thank you for joining. Friends, in next 60 minutes, we will be decoding and discussing the interest provisions under the GST law. We will be having a 360-degree analysis of various interest provisions under the GST law. So, in starting, we will discuss about section 50, wherein there is a levy of interest along with rule 88B, which is newly inserted, but it has a retrospective effect from 1st July 2017. So these are the basic section and rules for levy of interest. And we will study this section and rule by way of case studies. So what we have done is that we have taken 12 case studies. Initially, first 4 case studies relates to, say, interest on late filing of returns, or in case of omission of invoice in return, wrongly ITC availed, not utilized or utilized, etc. We will take some of the common issues being faced by all of us, and we will try to answer them after reading section 50 and rule 88B together. Thereafter, we will drill down into more interesting issues under the interest provision, namely whether there can be an interest on erroneous refund, whether government can levy interest on wrong transitional credit, reversal of ITC due to failure of payment within the stipulated time, so on and so forth. So our entire approach will be to understand these provisions using the practical case studies which we are facing on daily basis. The first case study relates to late filing of return. Let me give you an example. July month tax liability is 1 lakh rupees and my July month credit is 40,000 rupees. The due date of return is 20th August 2022, but I filed my return on 24th August 2022. So there is a delay of 4 days. Whether the tax interest has to be paid on 1 lakh rupees or on the net cash liability of 60,000. That's the first case study. Second is, there is an omission of invoice in the return. Invoice dated 15 July 2022. I should have reported it in July month return. I have not reported, and it is reported in, say, October 2022 return. What will be the implication? How interest has to be calculated? We will discuss the answer of these 2 case studies now. So before drilling down into the answer, let us read the provision together, so that we all are on the same page. Section 50, subsection 1 of the CGST Act. Very important. It says, every person who is liable to pay tax in accordance with the provision of this act or the rules made thereunder, but fails to pay the tax or any part thereof to the government within the periods prescribed, shall, for the period for which tax or any part thereof remains unpaid, pay on his own interest at such rate not exceeding 18%. So section 50 subsection 1 talks about levy of interest in case the taxpayer fails to pay the output tax. Proviso to section 50 subsection 1, and it is effective from 1st July 2017, provided that the interest on tax payable in respect of supplies made during a tax period and declared in the return for the said period, furnished after the due date in accordance with the provision of section 39, except where return is furnished after commencement of proceeding under section 73 or 74, shall be levied on that portion of tax that is paid by debiting the electronic cash ledger. So section 50 subsection 1 simply talks about levy of interest in case of non-payment of tax. Proviso to section 50 subsection 1, it says that interest in case of delayed filing of return, whenever there is a delayed filing of return, the interest will be levied only on that portion of tax that is paid by debiting the electronic cash ledger. Similarly, Rule 88B, which is newly inserted rule, which is effective from 1st-7/2017, 88B1, it also says the same thing, that in case of delayed filing of return, only in a case where there is no proceedings which is initiated under section 73 or 74, the interest will be levied only on the cash component. So as per proviso to section 50 subsection 1 read with rule 88B1, in our example, the interest will be levied only in case of 60,000 rupees. It will be levied only on the amount of tax which I am paying using the cash ledger, that is 60,000 rupees. However, there is an exception to this proviso, which is there itself in the rule and in the act, that the proceeding should not have been commenced under section 73 or 74. So in our example, if there is a delay in filing of return and I'm sumo paying interest, then interest will be levied only on the 60,000 rupees. However, if the proceeding under 73, it means that the show cause notice. See, section 61 deals with scrutiny of notice, audit proceedings are separate, investigations are separate. When we talk about proceedings under 73 and 74, to my mind, it means issuance of show cause notice. So if you have not been served with a show cause notice under 73 and 74, you pay the interest before that. In that situation, it will be 60,000 rupees. Otherwise, the levy of interest will be on the entire 1 lakh rupees. Very important to note. Commencement of proceeding means issuance of show cause notice to my mind. Moving on to the second case study. In this case study, I missed reporting the invoice in July month return, which I am reporting it at later point of time, say in October 2022 return. I have my balance also in my ITC ledger. There is a tax amount of 1 lakh which I have to deposit, and in my ITC also I have a balance of 1 lakh which is being maintained throughout the period from July to October 2022. Can I say that since there is no cash which I have to deposit, this 1 lakh I could have set off from my ITC itself? Hence, I am not liable to pay the interest because my cash liability is 0. The answer is no. In this situation, very important, if you have missed reporting of the tax invoice, in that situation, the interest will be levied on the entire amount of 1 lakh rupees from the due date of July month return till the due date of the return in which you have rectified, that is October in our example. I will take your kind attention towards the agenda of the 31st GNC Council meeting, wherein this specific case study was discussed. And I will read the exact words. The committee observed that the proposal to charge interest only on the net liability of the taxpayer after taking into account the admissible credit may be accepted in principle, that is net cash liability, interest on net cash liability payment. Accordingly, the interest would be charged on the delayed payment of the amount payable through the electronic cash ledger, what we discussed in situation 1. However, where invoice, debit notes have been uploaded in statements pertaining to the period subsequent to the period in which they should have been uploaded, the interest shall be calculated on the amount of tax calculated on the taxable value from the date on which tax of such invoice was due. This would require amendment in the law. And in fact, when we see Rule 88B, they have specifically said in 88B sub Rule 2 that in all other cases, so the first case was delayed filing of return. And the second is in all other cases where interest is payable as per section 50 subsection 1, it shall be calculated on the entire value from the date when this amount was due. So in this example of omission of invoice, I have to pay interest from July till October. Now let's move to our next case study related to input tax credit. Say in the month of January 2022, I wrongly availed input tax credit amounting to 5 lakh rupees. Now today in August month, September month, I have realized that this was a wrong credit and I have to reverse it. There can be two situations. First situation, my credit has not been utilized. I repeat, my credit has not been utilized and I have 5 lakh rupees minimum balance in my credit ledger throughout the period. In that situation, let us now see what does section 50 subsection 3 says. So the third situation which we are discussing it, wrong ITC availed, not utilized, 5 lakh rupees of ITC, and my balance is of 5 lakh rupees, which is being maintained till now. Section 50 subsection 3 has been substituted and it has been given retrospective impact from 1st July 2017. And what does this section 70 subsection 3 says? It says that where the input tax credit has been wrongly availed and utilized, the registered person shall pay interest on such input tax credit wrongly availed and utilized at such rate not exceeding 24% as may be notified on the recommendation of council in such manner as may be prescribed. So the word used are input tax credit has been wrongly availed and utilized. Let us read this section along with rule 88B also. 88B3. In case where interest is payable on the amount of ITC wrongly availed and utilized in accordance with subsection 3 of section 50, the interest shall be calculated on the amount of ITC wrongly availed and utilized for the period starting from the date of utilization of such wrongly availed input tax credit till the date of reversal. And now, how do I say my ITC has been utilized or not? When do I say that my ITC has been utilized or it is remaining unutilized? How do we say so? A specific explanation has been introduced to rule 88B. Explanation. First, for the purpose of this rule, input tax credit wrongly availed shall be constituted to have been utilized when the balance in the electronic credit ledger falls below the amount of ITC wrongly availed, and the extent of such utilization of ITC shall be the amount by which balance in electronic credit ledger falls below the amount of ITC wrongly availed. So in our example, if I had taken the wrong ITC in the month of January 2022 and I want to reverse it in today in the 3B of August GST 3B, which is due on 20th of September. So if my balance in ITC ledger till now is minimum 5 lakh rupees, and it has not fallen below, then it's such a situation, it will not be deemed to be utilized. It will be deemed to be unutilized. Accordingly, there will be no interest on reversal of ITC wrongly availed and not utilized as per section 50 subsection 3. Read with explanation. Let me add a twist to this. What happened in our example was that January month my ITC balance was 5 lakh rupees. February month 5 lakh rupees. March month 5 lakh rupees. However, April month it reduced to 4 lakh rupees. And from April till August, it's still 4 lakh rupees. How interest will be calculated? So in this case, since my balance got reduced in the month of April from 5 lakh to 4 lakh, then 1 lakh will be deemed to be utilized in the month of April month. And accordingly, I have to levy interest on this 1 lakh rupees from April month return till I am reversing it in my August month return. So April month return will be treated as the date on which my reversal will be triggered. Now let me add another twist to this example. I had taken 5 lakh rupees of input tax credit. January, February, March, my balance was 5 lakh rupees. April month, my balance reduced to 4 lakh rupees. Again, in May month, my balance increased to 5 lakh rupees, and May, June, July, August, it's still 5 lakh rupees. So it is only for 1 month, my balance reduced from 5 lakhs to 4 lakhs, and thereafter, it again got 5 lakh rupees in the month of May. It was only for the month of April, my balance got reduced. Whether interest will be levied on this 1 lakh only for the April month, or it will be levied from April to August. I request like the participants should write in the chat box, etc. What is their specific view? Like in this particular example, my balance was 5 lakh rupees till March. April month reduced to 4 lakh rupees. And thereafter again, it's 5 lakh rupees. May, June, July, August, 5 lakh rupees. So whether interest on 1 lakh will be levied for 1 month or for entire period from April to August. Rahul ji is saying only for April month. Abhishek is saying only for April month. So generally the view which is coming is that it should be levied only for 1 month. Friends, let's read what does the rule says, because we have to go back what the rule says. In case whereas interest is payable on ITC wrongly availed and utilized, the interest shall be calculated on the amount of ITC wrongly availed and utilized from the period starting from the date of utilization of such wrongly availed input tax credit till the date of reversal of such credit on payment of tax. I repeat, it will start from the date of utilization of wrongly availed input tax credit till the date of reversal of such credit or payment of tax. So there is a specific rule which is there. In April month, it got reduced. So my interest meter will start from April month due date return till the date of reversal. In May month, just because I got some extra credit of 1 lakh rupees and my balance reinstated to 5 lakh rupees doesn't mean my interest liability will stop. I have actually done the reversal in August month 3B. So accordingly, I have to pay interest from April to August. Very important to note. It is not for 1 month. It is for the entire period, April to August. This is the way rule is drafted. Moving on to the next issue. Interest in case balancing is lying in my cash ledger. Many times people say that in my cash ledger, I was having sufficient amount of balance, but I failed to pay the tax through 3B. I missed some invoices, but there was a balance in my cash ledger. The issue is, can I take an argument that if I was supposed to pay certain tax amount to the government in my output returns, but I had not paid, however, still, since there was a balance which was lying in my cash ledger, there is no interest liability. Friends, to answer this question, I will take you to what was happening in pre-GST regime. In pre-GST regime also, there was a concept of PLA in excise, etc. So during that time, what used to happen was that you were depositing your amount in PLA account. And whenever you were making a tax payment, then there was a debit entry in your PLA account. And so is the system in GST regime also. Cash ledger is nothing but your own wallet, your own account. Depositing in cash ledger does not mean that you have paid tax to the government. Only when you make a debit entry from the cash ledger, then only tax is deemed to be paid to the government. And why do I say so? This is because the way law is drafted, the way section 49 is drafted. Let's read 49.1 and 49.3 together. 49.1, every deposit, please note, every deposit made towards tax, interest, penalty, fee, or any other amount by a person by internet banking or any other mode shall be credited to the electronic cash ledger of such person to be maintained in such manner. So whatever amount you deposit, it will be credited to the cash ledger. The amount 49.3, the amount available in electronic cash ledger may be used for making any payments towards tax, interest, penalty, fee, or any amount which is payable. So this amount which is in your cash ledger, that has to be used for making a payment towards your tax liability. How do you pay your tax liability? You may pay your tax liability using GST 3B by declaring your output return or using DRC 03, etc. So mere deposit in cash ledger does not mean there is a payment of tax. Payment of tax is through a debit of cash ledger only. And similarly, we have series of judgments in pre-GST regime also, wherein they said that just because you have deposited money in PLA does not mean that you have made the payment of tax. It's only when you make a debit entry from PLA, then only tax will be deemed to be paid. And similar proposition is there in GST regime. Having discussed these issues, now let's discuss some of the more interpretational issues which we are facing on daily basis. Let me give you an example. I have taken wrong refund from the department, and department is asking to surrender the refund back to them. And they, whenever they ask to surrender the refund back, they always say surrender refund along with interest. So let me take one example. Friends, we all are aware, VKC footstep, Supreme Court judgment. Refund of input services not allowed in case of inverted duty structure. Supreme Court judgment. The law is settled. What had happened before this judgment was that many taxpayer has applied refund both for input and input services in case of inverted duty structure, and they got the refund also. They got the refund also. Now there is a Supreme Court judgment. The judgment says refund of input services is not available, and department is issuing notices to various taxpayers asking them to surrender back the refund along with the interest. Similarly, there are other various issues being faced by taxpayers related to surrender of refund. The issue is whether interest can be levied in case of surrender of refund. Friend, it's a settled principle. Interest cannot be levied in the absence of a substantive provision for levy, meaning thereby that until and unless in the act itself there is a provision to levy interest, interest cannot be levied by the department. Now let us read section 50 subsection 1 and section 3 what we have read. In section 50 subsection 1, it simply says that interest will be levied in case output tax has not been paid. So section 50 subsection 1 talks about levy of interest in case of non-payment of output tax. Subsection 3 talks about interest in case of wrong utilization of ITC. So only two situations are covered: output tax less paid or not paid, or input tax wrongly availed and utilized. When we see section 73, which is the adjudication section related to issuance of show cause notice, it do talks that the proper officer has a power to issue notice in case of short payment, non-payment, wrong ITC availed, utilized, or in case of erroneous refund. And this notice can be issued along with interest payable under section 50. So section 73 contemplates issuance of notice for refund. And it also says along with interest payable thereon under section 50. But when we see section 50, there is no section to levy interest on refund. The only section is to levy interest is only on output tax not paid or ITC wrongly utilized. But there is no section to levy interest on case of output refund. Though even if we talk about rules, etc., in rules, rule 86(4)(b), for example, it says you have to surrender back the refund along with interest. So in rules, you will find at various places they talk about surrender of refund along with interest under section 50. But where is section 50? Where is the provision under section 50 to levy interest on wrong refund? It's a settled position. Unless there is a charging provision by which a liability is created or fixed, there cannot be a machinery provision for the recovery of such liability. In fact, the Supreme Court in the case of Indian Carbons has held that there is no substantive provision for charging levy interest under the Central Sales Tax Act. Therefore, interest cannot be recovered from the SSC by invoking the machinery provision under the Assam Act. Accordingly, in our view, there is no charging provision for levy of interest in case of erroneous refund under section 50. Though section 73 talks about issuance of show cause notice, etc., but in the absence of substantive provision to levy interest under section 50, there cannot be any interest on wrong refund. So whenever we get any notice or whenever we are surrendering any wrong refund, please note that legally no interest is payable because there is no section under which interest is levied. However, there is a possibility that if you argue and contest on the ground that I am not paying interest because there is no provision, government may come out with retrospective amendments. We are aware how the government is used to bring such kinds of retrospective amendments. So there is a high chance that there is a lacuna in the law and they may curb this lacuna by bringing a retrospective amendment. Moving on to our next case study. Interest on reversal of ITC owing to failure of payment within 180 days. And it's a very interesting case study. We will devote certain time on this case study. Section 16, subsection 2, it says, one of the proviso, where a recipient fails to pay to the supplier of goods or services or both, other than the supplies on which tax is payable under reverse charge, the amount towards the value of supply of goods or services along with the tax payable thereon, within a period of 180 days from the date of issuance of invoice by the supplier, the amount equal to ITC availed by the recipient shall be added to his output liability along with interest thereon in such manner as be prescribed. So what does this rule section simply says? It says if you have not made payment within 180 days from the date of issuance of the invoice of the supplier, you have to pay back this ITC, whatever you have availed, along with interest in such manner as may be prescribed. And we see rule 37(3), it says the registered person shall be liable to pay interest at a rate as specified under section 50 for the period starting from the date of availing such credit till the date when such amount is added in output tax liability. So I got an invoice in the month of April 2022. I availed the credit. 1st April 2022 was the invoice date. I availed the credit. I have not made the payment within 180 days. Now I have to reverse the credit along with interest, and rule 37(3) says interest will be levied from the date of availment of credit and not from 181st day. It simply states from the date of availing such credit, which is April month, till the date when I'm reversing it, adding it my output tax liability, that is say October month. So prima facie, when we read the section and rule, it comes to a conclusion that interest will be levied from the date of availing the credit and not from 181st day. So is this understanding? I will like the participants to write in the chat box. Is this understanding correct according to the DEM? Interest, this rule. Now we have read the section, we have read the rule. Rule is in front of you. So is it correct that the interest has to be levied from April 2022 month, the invoice date, and not after 188th date? That is 180 days got over on 30th September. So not from October onwards, but interest will be levied from April onwards itself. So is this understanding correct? I want people to write when they see rule 37 sub rule 3. Interest to be levied from the date of availing ITC. Yes, I availed the ITC in the month of April 3B. So it will be levied from 20th of May. Yes, as per rules, Manish ji is saying yes, as per rules, it is right. From the date of availing ITC, so April is correct. So Deepak ji is also saying. Now, Nitesh ji is saying if ITC not utilized, then no interest. But whether this section is talking about utilization or not, whether this rule, is it talking about utilization? One question which we will answer in shortly. Rule simply says from availment. When we read section 50 subsection 3, it talked about availing and utilized. Availed and utilized. Rule 88B also talked about availed and utilized. Now this rule 37.3 is saying from date of availment. Now let's come to the discussion part. I will give you various possibilities and then my conclusion. First possibility, first interpretation. No interest can be levied at all in this scenario. I repeat, no interest can be levied at all in this scenario. Why do I say so? The reason is, if you see section 16 subsection 2, it says that if I fail to make the payment within 180 days from the date of invoice, the amount equal to the ITC availed by the recipient shall be added to his output tax liability. So what is written in the section 8, it shall be added to his output tax liability in such manner as may be prescribed. And when we go to the manner, rule 37.2 says the amount of ITC which is not paid shall be added to the output liability of the registered person. And where it will be added, it is written in GSTR 2B. So my first interpretation is that the way entire section and rule is drafted, it is based on my old return filing system of GSTR 1, 2, 3, wherein in GSTR 2, you had a separate table for adding this ITC, whatever ITC you were supposed to reverse, there was a separate table to add in GSTR 2 as your output liability. Today in GSTR 3B, you cannot add this as your output tax liability. There is no table in GSTR 3B to add it as your output tax liability. So, and in the rule, it specifically says that I have to add it in GSTR 2. Accordingly, since GSTR 1, 2, 3 has been kept in abeyance, accordingly, section 16.2 read with this rule 37 cannot be implemented. And since this rule is not implementable, this process cannot be implemented. It specifically says, even the rule 37.3 says, till the date when such amount is added in the output tax liability, there is no mechanism which you have provided how to add in the output tax liability. So that's the first argument, that no interest should be levied at all, because section 16 read with rule 37 does not provide the mechanism to add it to the output tax liability in GSTR 2, because everything has been kept in abeyance due to technical glitches. That's the first argument. Moving on to the second part. Let's not take so aggressive argument. Let's be conservative. Let's go and pay interest. Now the issue arises. Rule 37.3 says, interest shall be availed from the date of availing such credit. Now, if it talks about that this interest will be levied from the date of availing such credit, and it is silent on whether it is utilized or not, the issue which we should answer is, interest is being levied under which section? So what we have discussed in the previous slide, that there should be a section under which there should be a power to levy interest. It is a substantive section. You cannot levy it by way of rules. So under which section the interest is being levied for this particular case study of non-payment within 180 days? Is it section 16.2 or is it section 50 subsection 3? Can we say the interest is being levied under section 16.2 because it says along with interest thereon? To my mind, if we take that argument that interest is being levied under section 16.2, then the interest levy will itself fail because section 16.2 is not drafted properly. It only says along with interest, it does not provide any other details, and in such manner as may be prescribed is only relevant to output tax liability and not to interest. So section 16, so to my mind, this interest at best can be levied only under section 50 subsection 3. I repeat, this interest can be levied only section 50 subsection 3. And Rahulji also saying like section 50 subsection 3. When it is being levied under that section, and that section itself says availed and utilized. When section is saying availed and utilized, how can rule contradict section? So we have to give a harmonious meaning. And to my mind, interest will be levied only from the date of utilization and not availment. I repeat, since section 50 subsection 3 talks about levy of interest only from the date of utilization, accordingly, interest will be levied from the date of utilization, irrespective of the fact that Rule 37.3 talks about availment. So these are some of the interpretations which we have to give to this section and rules, and nothing is settled in India as of now. There will be a lot of jurisprudence, but what we can see from various case studies which we are discussing is that interest is actually a very good topic. It involves various interpretation of law. And now I will ask my colleague Chetan to take you with further case studies and more such interesting issues. Over to you, Chetan.
Thank you, Tushar. So now coming to the next issue, which relates to the transitional credit. 1 minute. Transitional credit. So many of the taxpayers who have migrated from the pre-GST regime to the GST regime has claimed transitional credit of Senate credit, which was either lying in their balance was lying in their service tax or excise or VAT return, or in relation to the closing stock or other capital goods which they have carried forward in this transitional credit in the GST regime. Now the department is verifying this claim and issuing so-called notices under section 73 and 74 of the CGST Act, along with proposal for recovery of interest also. For this purpose, they are also relying upon Rule 121, which says the amount credited under sub-rule 3 of Rule 117 of the CGST rules may be verified, and the proceedings under section 73 or 74, as the case may be, initiated in respect of any credit wrongly availed, whether wholly or partly. So the department is verifying this ITC claim, transitional ITC claim of the SSCs, and then if they are finding it incorrect in their view, then they are issuing so-called notices under section 73 and 74, and they are also proposing for levy of recovery of interest also. So in this case, let us first see that section provisions of section 140. What it says about section 140 subsection 1, which allows this transitional credit. It says a registered person other than a person opting to pay tax under subsection 10 shall be entitled to take in his electronic credit ledger the amount of Senate credit of eligible duties carried forward in the return relating to a period ending with the day immediately preceding the appointed date furnished by him under the existing law. So the word used here is Senate credit of eligible duties and not input tax credit. Again, if we see the definition of input tax credit as provided under the GST Act, it says input tax credit means credit of input tax. Again, input tax is defined as central tax, state tax, integrated tax charged on any supply of goods or services or both made to him, and includes the integrated goods and service tax charged on import of goods, tax payable under section 9 and subsection 4 and 3 of the CGST Act, tax payable under section 5 subsection 4 and subsection 3 of the IGST Act, tax payable under section 943 of the respective SGST Act, and tax payable under the provisions of section 7 subsection 3 and 4 of the Union Territory GST Act. So here what we can see that in the definition of input tax credit, the legislature has not included or covered the taxes which were transitioned, the ITC which was transitioned from the pre-GST regime to the GST regime. Accordingly, that ITC cannot be considered as input tax credit. Now, department is issuing notice under section 73. As Tushar already mentioned, 73 talks about recovery of interest, recovery of this tax which is short paid or not paid or erroneously refunded, or input tax credit which have been wrongly availed and utilized. So what recovery is allowed here is recovery of input tax credit. But if we see the definition of ITC, which we have already seen here, in there they have not covered the transition ITC. So in our view, we can argue that the department does not have any power to recover this ITC on wrong availment of ITC, wrong availment of transition credit, if any, by the taxpayer. First argument we can take that. Then second, recovery department is proposing this recovery under section 50 subsection 3 of the CGST Act. Again, there the provision says that such recovery can be made in respect of ITC wrongly availed and utilized. So again, recovery is provided, interest is provided for wrong availment and utilization of ITC and not regarding the transitional credit. So department again lacks the power to recover the this interest from the SSEs regarding the wrong availment of ITC. Then second, then again they are in some cases they are relying upon this rule 121. So in this respect we can say that relying upon rule 121, department cannot recover this interest on transitional ITC because the rules cannot travel beyond. It is settled principle of law that rules cannot travel beyond the scope of main legislation. Only if some provision is provided in the main statute, then in pursuance of that only rules can be framed, and using those powers, the department can initiate proceedings against the taxpayers. Then coming to the next issue, which is relating to wrong nature of tax. Sometimes it happens with the taxpayers that they may determine wrong POS of the supply made by them. Like suppose the nature of taxability, nature of transaction is dependent upon two things. One is location of supplier, second one is place of supply. If both are in the same state, then the transaction is considered as intra-state supply. And in case the location of supplier is one state and the place of supply is in another state, then the transaction is considered as interstate supply. But in some case, due to some wrong interpretation, or maybe due to some omission, the taxpayers consider the transaction as intra-state supply instead of interstate supply, or vice versa. Like suppose in this example, the supplier of security service is providing on-site security service in respect of an immovable property in Delhi. However, the supplier located in Delhi is raising bill on the recipient located in Kerala, and as per the provision related to place of supply, the place of supply should also be in Delhi, because the immovable property in respect of which these security services are being provided is located in Delhi only. Therefore, the supplier should have charged CGST and SGST considering the transaction as intra-state supply. However, the supplier has wrongly considered the transaction as interstate supply, considering the place of supply at the place of recipient of service in Kerala, and charged IGST. So tomorrow, if department or the SSE himself detect this error and determines they have wrongly discharged IGST in place of CGST or SGST, or they have wrongly discharged CGST and SGST in place of IGST, So whether they are required to discharge interest liability on the same, because in some cases department is finding some instances of this scenario, and in notices they are also seeking payment of interest. So in that case, what does the provision says? Section 77 of the CGST Act provides that a registered person who has paid the central tax or state tax, as the case may be, the central tax and the union territory tax on a transaction considered by him to be an intrastate supply, but subsequently held to be an interstate supply, shall be refunded the amount of tax so paid in such manner and subject to such conditions as may prescribe. So section 71 says that if some supplier made interstate supply, but he has wrongly considered the transaction as intrastate supplies and discharge central tax and CGST and SGST in respect of that transaction. So the CGST and SGST wrongly paid by the supplier will be refunded to him. That section 77 subsection 1 allows. Again, now the supplier has to pay the correct tax also, that is IGST. Regarding that, we may refer subsection 2 of section 19, which says a registered person who has paid central tax and state tax, as the case may be, on a transaction considered to be an intrastate supply, but which is subsequently held to be interstate supply, shall not be required to pay interest on the amount of IGST payable. So if a supplier has initially paid CGST and SGST by mistake, considering the interstate transaction as intrastate transaction, and subsequently if he is paying the correct tax, that is IGST, in that case he is not required to pay interest in respect of this correct payment made subsequently by him. So if the department is issuing notice for recovery of interest in such cases, then we can use these provisions and submit our replies that we are not liable to pay interest in such cases. Then coming to the next issue, this issue relates to reversal of common ITC. So as per rule 42 and 43, a taxpayer who is making supply of both taxable and exempted supply, he is required to take proportionate ITC to the extent it is related to taxable supply. So suppose that taxpayer is receiving some common ITC which is used by him both in making taxable supply as well as exempted supply. In that case, he has to calculate the common ITC to the extent related to exempted supply made by him. So in rule 42, they have prescribed the formula for determining the proportionate ITC pertaining to exempted supply in respect of input and input services. And in rule 43, the legislature has provided the formula for determining proportionate ITC related to capital goods, which is used for making both taxable and exempted supply. So in rule 42, what is the broader procedure the law has provided? That first, the taxpayer should calculate this common ITC, proportionate common ITC pertaining to exempted goods on monthly basis. So each month, what the taxpayer has to do, he has to identify the common ITC, because there are certain ITC that would be used exclusively in making taxable supply. There could be certain ITC that would have been used in making exempted supply. ITC which have been used exclusively for making taxable supply will be fully available, and ITC which is used for making and exclusively used for making exempted supply is not available at all. Now, the third category which the taxpayer has to identify is the common ITC, which is used for making both taxable as well as exempted supply, like rent of the building, security guard, ITC, and other things which can be said to be used for making both taxable as well as exempted supply. In this case, first, in each month, the taxpayer has to determine the proportion of ineligible ITC in the proportion of exempted turnover, and he has to reverse that amount of ITC in GSTR 3B of each month. Then in the subsequent financial year, the taxpayer is again required to calculate the proportionate ineligible ITC under Rule 42 in respect of input and input services on annual basis. That is for the entire financial year. And then he has to compare whether all those ITCs which he has earlier reversed was more than the amount again determined on the annual basis, or it was less than the amount which is determined on the annual basis. If the amount reversed earlier is less than the amount calculated on annual basis, then the taxpayer will be required to again reverse the differential amount in the subsequent financial year, but up to September of the subsequent financial year. In this case, Rule 42 to sub rule A of the CGST rule says that such reversal is required, and the said persons are also be liable to pay interest on the said excess amount at the rate of specified in subsection 1 of section 50 for the period starting from the first day of April of the succeeding financial year till the date of payment. So the liability here would arise, even if we are making this reversal or computation in September month, but the liability would arise from the 1st April only of the succeeding financial year. So now let us see what is the provision in the Act which allows such recovery or such payment of interest. So in this case, there is no specific provision in the GST Act which provides that in case of reversal of this ITC in these conditions, the taxpayer has to pay interest also and a particular rate. So in this rule, the legislature has referred section 50 subsection 1 for determining the rate of interest at which this interest liability should be discharged. So they have referred section 50 subsection 1, which is related to interest liability on payment of output tax liability. But in our view, since this liability relates to ITC, so we need to refer section 50 subsection 1 also. For rate purpose, we can refer to 50 subsection 1 as it is specifically mentioned here. But for other purposes, it's other conditions, we have to refer section 50 subsection 3. Again, what Tushar has earlier discussed, that in section 50 subsection 3, interest liability arise only after utilization, not only on availment, but after utilization of that wrong ITC. Only then interest liability arises. So in this case, there can be a scenario that such excess amount of ITC taxpayer may have utilized, may not have utilized. So considering these provisions of section 50 subsection 3, we can take a stand that interest liability should get triggered from a date later of the date of utilization or 1st April of the succeeding financial year, whichever is later. So suppose if we have already utilized the ITC in the respective financial year, say now we have to calculate this ITC for 21-22 in this financial year. So if the taxpayer has already utilized such excess amount of ITC in the previous financial year, then citing this rule, the taxpayer can say that my liability to pay interest will trigger only from the first day of April 2022. And in case if the taxpayer has not utilized that ITC, then and today it is reversing, he is reversing that ITC in the month of September GSTR 3B. In that case, it can be argued that as per section 53, I am liable to for making payment of interest liability only from the date when I have utilized such ITC. Since in this case, I have utilized this ITC only say August or September, from that day only, I am liable to pay that interest. That argument can be taken. Now coming to the next issue is related to interest on delayed refund. So there can be two situations. First, for any refund process initiation, any taxpayer has to first file the application for seeking refund. And as per section 54(5), that refund has to be refunded within 60 days from the receipt of application. And if it is not refunded within 60 days, then the department is also obligated to pay interest at the rate of 6% from the 61st day of the application. In some cases, the refund is rejected by the department. So in that case, the applicant approach the appellate authority, and in some cases he wins, in some cases he lose the case. So in cases where the applicant of the refund wins the case and appellate authority orders for granting the refund, in that case the applicant has to file the refund application again. And in such case, the proviso to section 56 provides that if the refund is not provided within 60 days from the second filing of application, in that case interest has to be paid at the rate of 9%. Next slide. So if you see this example, refund filing application date was 1st April 2022. Date, then the order was rejected by the department, refund application was rejected, then the SSC has approached the appellate authority for this against the refund rejection order, that is 1st September 2022. And after that, the second application was filed in pursuance of the order of the appellate authority on 1st October 2022. Refund was granted by the department on 31st January 2023. So in this case, how much interest the applicant is eligible for? As per the department, what they are doing, they are granting the refund only from the delay which was made from this after the 60 days from the second application filed by the applicant. That is, in this case, suppose they have filed the second application on 1st October, so 60 days will get expired on this 30th November. That will expire. So and they have granted this refund on 31st January. So department is granting interest if they are granting. In some cases they are not granting at all, but in case if they are granting, then they are granting from the period of 1st December 2022. That is after 60 days from the expiry of after 60 days from the expiry of second application till the date of sanction of refund. But they are not granting this interest liability for the earlier period, that is from the date from the application date till the date of second till the date of second this application. So in our view, as per the section 56, can we come back to this slide, previous slide? According to section 56, in our view, interest and interest will be entitled to interest can be claimed by this taxpayer from the 60 days of expiry of 60 days of the first application till the expiry of 60 days of second application. Till that date, the applicant is entitled for claiming interest at the rate of 6%, and after expiry of 60 days from the second application, the applicant is entitled for claiming interest at the rate of 9%. So last, in some cases, these taxpayers are going for appeal before the first appellate authority or the appellate tribunal, and there is a condition for making pre-deposit of some portion of some amount of tax. And in some cases, where the SSC won the case, and or the appellate authority issues the order in the favor of SSC, and the SSC is entitled to get back the pre-deposit amount. In that case, in our view, interest is payable to the taxpayer at the rate of 9% from the date of payment of amount on, that is the date on which the pre-deposit made, till the date of refund of such amount. So by this we are closing our this discussion.
Thank you, Chetan. So now we will be taking up the various question and answers. You may write the same in your chat box. Some of the questions which I have come is, so whether the transitional credit cannot be recovered. So yes, as we discussed, see section 7 recovery, when we say show cause notice adjudication under section 73 and 74, that can be done only for input tax credit. And rule 121 says that the amount, when we talk about transitional credit is not input tax credit. Input tax credit is defined. It is specifically defined under the GST law, which says that it is a tax on supply of goods. It is CGST, SGST, IGST on supply of goods or services to me. So it is a tax on supply of goods or services to me. Whereas transitional credit is an amount of standard credit which is carried forward. It is an amount of standard credit. There is nowhere in the law which is written that this amount of standard credit will be deemed to be input tax credit for the purpose of section 73 or levy of interest under section 50 subsection 3. Accordingly, since my section 73, 74 talks about ITC, my section 50 subsection 3 talks about levy of interest in case of wrong input tax credit, and transitional credit is not input tax credit. Accordingly, there is no provision to levy interest under the GST law. We will be providing the PPT to the Taxmann team so that they will be sharing with all of you. I think we have answered the question. Case 11 date is, see, case 11, when we are discussing case 11 related to the refund. First for 2000, we will just again see this presentation, this example. First for 2022 was my application date of refund. It got rejected. I went to appeal. Appeal gave me a favorable order. 1st September 2022. I filed, after getting a favorable order for appeal, I again need to file a fresh refund application pursuant to an order. I filed that refund application on 1st October 2022, and department gave me refund on 31st January 2023. So there will be two interest. First is like from under the proviso, since the refund is not granted within 60 days from 1st October 2022, I will get the refund from B part, if you can see on the slides, from 1st December 2022 till 31st January 2023. I will get the interest at 9% because I will be covered under the proviso to section 56, which says that from the second application, 60 days from the end of the 60 days from the second application. And for the previous period also, since I was not given the refund within 60 days from 1st for 2022, so from 1st June 2022 till 30th November 2022, I will get 6% interest. And Nilesh Ji asking, can section 50 subsection 1 be triggered in case where taxpayer had deposited cash in ECL before due date but file 3B delayed? As we discussed, that mere deposit in cash ledger will not be treated as payment of tax. Even in pre-GST regime, we have series of judgments related to the same topic, that deposited in PLA does not mean payment of tax. Even the way section 49 is drafted, it is very clear. If we see section 49.3, the amount available in the electronic cash ledger may be used for making any payment towards tax, interest, etc. So if you have deposited something in your cash ledger, it is not a payment. If there is a delay in filing of 3B, you will have to pay interest on the delay on filing of 3B to the extent of liability paid through cash ledger. So Stephen G is saying any transitional credit comes under the underlying inputs capital goods, then it needs to be treated as input credit under GST regime. So logically you may be right, but practically when input tax credit definition is defined, there is a definition of input tax credit, there is a definition of input tax, and it only talks about CGST, SGST, IGST paid on supply of goods and services, and that is not what transitional credit I have carried forward. So there is a difference under the GST law in respect of transitional credit as well as ITC definition. These are two different definitions, and hence we are arguing that section 73 and section 50 subsection 3 does not apply to transitional credits. No, is department practically giving interest on refunds? No, department is not practically giving interest on refunds. Whenever you get a refund, you will not get the interest. You have to apply separately. I think we have answered all the queries. With this, we end our presentation. Over to Taxmann team. Thank you.